Welcome to Smart Stock Watch, your go-to channel for in-depth financial analysis. Today is March 26th, 2025, and we're diving into the first quarter earnings report of Jefferies Financial Group. Joining us is John, a senior analyst from Smart Stock Watch. John, thanks for being here.
Thank you for having me. It's a pleasure to discuss Jefferies' latest financial performance.
Let's get started. Jefferies has just released their Q1 2025 financial results. Can you give us a brief overview of the company and the highlights from this report?
Absolutely. Jefferies Financial Group is a diversified financial services company engaged in investment banking, capital markets, and asset management. In this quarter, they reported net earnings attributable to common shareholders of $127.8 million, with a diluted EPS of 57 cents. However, this is a decline from the previous year's 69 cents EPS.
Revenue and profitability overview. Let's start with the top line. Jefferies reported total net revenues of $1.59 billion for Q1 2025, which is a decrease from $1.74 billion in the same quarter last year. John, what are the key factors behind this revenue decline?
The decline in total net revenues is primarily due to a challenging environment in asset management and capital markets. Asset management net revenues fell significantly, and capital markets revenues also saw a dip, particularly in fixed income. Despite these challenges, Jefferies managed to maintain a return on adjusted tangible equity of 8%.
And how did this impact their profitability?
Net earnings attributable to common shareholders were $127.8 million, down from $49.6 million last year. The diluted EPS of 57 reflects this decline in profitability, which is attributed to lower revenues and increased non-compensation expenses.
Investment banking and capital markets performance. Investment banking and capital markets are crucial segments for Jefferies. How did these areas perform in the first quarter?
Investment banking net revenues were $700.7 million, slightly down from last year. However, advisory revenues saw a significant increase to $397.8 million, driven by market share gains and higher transaction levels. On the other hand, capital markets revenues were $698.3 million, with equities revenues increasing by 10% to $409 million, showcasing strong global performance.
What about the fixed income segment?
Fixed income revenues decreased by 18% to $289 million, primarily due to lower volatility and overall volumes compared to the exceptionally strong first quarter of last year.
Asset management and non-interest expenses. Moving on to asset management, how did this segment perform?
Asset management revenues were $191.7 million, down from $273.4 million last year. The decrease was mainly due to weaker investment returns in a challenging environment, despite a modest increase in management and performance fees.
And what about their expenses?
Jefferies' compensation ratio was 52.8%, slightly lower than last year. However, non-compensation expenses increased, partly due to charitable donations and higher business development expenses.
EPS forecast and analyst expectations. Analysts had forecasted an EPS of 88 cents for Jefferies this quarter. How did the actual results compare?
Jefferies reported an actual EPS of 57 cents, which fell short of the 88 forecast by analysts. This miss can be attributed to the challenges in asset management and capital markets, as well as increased expenses.
What does this mean for investor sentiment?
The EPS miss might lead to some negative sentiment among investors, as it indicates that Jefferies is facing headwinds in key areas. However, their strong performance in advisory and equities could provide some reassurance.
Management commentary and strategic outlook. Let's discuss the management's commentary. What insights did the CEO and president provide?
CEO Richard Handler and President Brian Friedman expressed confidence in their strategy and team, emphasizing their focus on clients and long-term growth opportunities. They highlighted market share gains in advisory and debt underwriting, and while they acknowledged the challenging environment, they remain cautiously optimistic about the future.
How does this align with their strategic outlook?
Jefferies is committed to navigating the current uncertainties by maintaining strong client relationships, managing risks, and striving to gain market share. Their strategic focus remains on leveraging their global businesses to drive growth.
Key takeaways. As we wrap up, let's summarize Jefferies' performance this quarter. Despite facing challenges, they reported net earnings of $127.8 million and a diluted EPS of 0.57 cents. Investment banking revenues were strong at $700.7 million, but asset management faced headwinds.
Indeed, while Jefferies missed EPS expectations, their strategic focus and market share gains in key areas provide a solid foundation for future growth. Investors should keep an eye on how they navigate the current market challenges.
Thank you, John, for your insights, and thank you to our viewers for tuning in. If you found this analysis helpful, please like, share, and subscribe to Smart Stock Watch. We'd love to hear your thoughts on Jefferies' performance in the comments below.